Ladies and gentlemen, good day and welcome to the GE T&D India Limited conference call for the second quarter ended 30th September 2022. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star and then 0 on your touchtone telephone. Please note that this conference is being recorded. I now hand the conference over to Mr. Suneel Mishra, Head of Investor Relations at GE T&D India Limited. Thank you, and over to you, sir.
Thank you, Rochelle. Good day and welcome to this conference call that has been organized to present and discuss audited financial results for the second quarter ended as of 30th September 22. Now let me introduce GE T&D management team available on this call. We have with us Mr. Pitambar Shivnani, who is the Managing Director and Chief Executive Officer. We have Mr. Sushil Kumar, CFO cum Whole-Time Director. Mr. Sandeep Zanzaria, who is our Commercial Leader. We have Mr. Maria Sundaram Antony, who is our Project Business Leader. We also have with us Ms. Bhumika Chandra, who is the Company Secretary. And we have with us Mr. Anshul Madan, who is our Communications Leader. Please note that this conference call is scheduled up to 5 p.m. I hope you would have received the investor analyst presentation, and the same has been uploaded at our website. I hope you would have also read out the disclaimer as per slide number 2. So Mr. Shivnani will begin this conference call highlighting key events of the quarter. Then Mr. Maria updating us on operations, followed by Mr. Sandeep Zanzaria, who will take us through order book and the T&D grid market. Then Mr. Sushil Kumar will give his insights on the financials. I would now request Mr. Shivnani to begin the conference with his opening words. So over to Mr. Shivnani.
Thank you, Sunil. Ladies and gentlemen, good evening. Thanks for joining the call. We hope you and your families are healthy and safe. I would like to start this call by giving you a brief overview about the last quarter and then would request my other colleagues present in the call to go through the details. First of all, thanks to the diligence of our execution teams and consistent efforts towards lean initiative, we have been able to deliver a profitable second quarter of financial year 2022-23. We have reported a net profit of 2.8 crores compared to a loss of 7.7 crores in a corresponding quarter of the last financial year. Our overall sales in the second quarter were at 700 crores compared to 850 crores in the corresponding quarter of last financial year. And we received the orders for around 490 crores. The orders were down in the second quarter due to the few major decisions regarding TBCB contracts getting deferred to Q3 and Q4. However, we have a good pipeline in the next quarter, and Sandeep will cover more about this in his address. As we move into the last 2 quarters of the financial year, we continue to focus on reducing costs to drive profitability. We have seen some stability in commodity prices and inflation. However, we continue to monitor these variables closely and are well placed to adjust our procurement strategy accordingly. As per the report released this Monday from Arthur D. Little, a renowned international management consulting firm, India will lead additional strategic investment of over $300 billion to achieve its clean energy capacity target of 500 gigawatts by 2030. The findings of the report further reinforce the continuous growth of the Indian power sector in the coming years. The clean energy acceleration, along with the government focus in introducing policy reforms in the power sector, will boost the transmission industry overall. Our strategy of picking new orders remain unchanged. Our priority will be to pick orders that will help us grow profitably, keeping in mind the long-term sustainability of the company. With that, I will request Maria Sundaram to provide further insights on the operation during the quarter. Over to you, Maria.
Thank you, Pitambar. Good evening, ladies and gentlemen. It is my pleasure to share with you the operational update of GE T&D India Limited. In this quarter, last quarter, Q2 of fiscal year 22-23, we actually continue to commission key milestones for our customers across the region, and it involved commissioning of major equipment at different substations. And I would like to call out some of those key milestones executed in some of our key substations in the region in the last quarter. I think we commissioned ICT in 100 MVA ICT in HP, Himachal Pradesh, for the Himachal Pradesh Transmission Company. And then we also commissioned, I think, 200 MVA ICTs for MSCTCL in Pimpalgaon substation in Maharashtra. And then I would say we actually covered a lot of commissioning milestones. I think completed a lot of commissioning milestones in Bhutan at different substations for Bhutan Power Corporation in Samcholing, where we commissioned the transformers, as well as in Damji, where we also commissioned transformers there. And then in Dagapela, where we commissioned the second 40 MVA, 220 and 33 kV transformer, along with the 33 kV GIS. So this was a significant completion which we did in Bhutan. And then apart from that, we commissioned around 400 kV GIS base for our Doosan Jawaharpur power plant, which is getting built by Doosan for the UP, Uttar Pradesh State Corporation, I think. And we actually commissioned the 3 bays out of the 15 400 kV bays, which we have planned to do there. And then in addition to that, in Orissa, in Hinjali Cut substation, we commissioned the transformer along with the 5 bays of 132 kV GIS and 9 bays of 33 kV GIS. And then finally in Jharkhand, in Latehar substation for PGCIL, we commissioned the 220 kV AIS bays. So we continue to kind of implement our technologies covering our transformers, GIS, AIS in the substations for the region. So we'll continue the momentum as we move into the last 2 quarters of this year. Thank you, and I will now hand it over to Sandeep Zanzaria to give the commercial update.
Thanks, Maria, and good afternoon, everyone. So if you look for H1 results, in terms of orders, we are down by about 2%. So against 1,110 crores of H1 performance for 2021-22, we are close to about 1,090 crores of H1 performance for 22-23. But if you look the comparison on quarter and quarter, we are down by about 23%, which is 490 crores versus 30 crores. This quarter has been primarily got impacted as to Thunder side is by shifting of a lot of TBCB projects. So the complete Rajasthan packages, because of GIB issues, have again shifted, and even the Khavda packages are also now getting delayed. Also because of
I'm sorry to interrupt. May I request you to please move the phone a little closer to you, sir? We can hear you better.
Okay. So now is it okay?
Yes, sir. Please go ahead.
So the Khavda packages also and the associated packages are also getting delayed due to certain approvals and survey issues in that area. But we are now seeing that probably in Q3 and Q4, a large number of decisions will be taken. If you really look at the details of the orders which are there, so most of the orders are centered around our GIS product and as well as the automation and the maintenance contracts. So another aspect would be is that we are we are in a good way, close to about 500 crores, which we have carried over from the last quarter, which the orders could not come due to the procedural issues. So that would be a carryover which is going to be there. So I hand it over to Sushil for further.
Thanks, Sandeep. Good evening, everyone. We move to page 6 on financials. As Pitambar mentioned, during the quarter two, we generated a revenue of 700 crores. This was 17% lower than the last year's revenue of 851 crores. However, at the same time, due to operational execution improvement versus last year and reduction in expenses, we have been able to generate an EBITDA of around 34 crores, which represents 4.8% of revenue, compared to an EBITDA of 20 crores, representing 2.4% of revenue in the last year. The EBITDA includes other income because most of the elements in the other income are operational in nature. Similarly, on a first half basis, we generated a revenue of around 1,300 crores, which was lower than the revenue of 1,500 crores, approximately 1,500 crores generated in the last year by about 13%. However, we see a similar improvement in the EBITDA. In the first half of this year, we generated an EBITDA of approximately 65 crores, representing 5% of revenue, versus 21 crores, representing 1.5% of revenue in the last year. During the first half this year, our debt has increased from 0.8 billion in the beginning of the year to about 3.6 billion at the end of September. This is mainly because of increase in the working capital, and we are taking actions to recover this in the second half of the year. Moving to page number 7, which gives a breakup of orders, revenue, and orders in hand. For about 490 crores of orders booked in quarter 2, 40% of the orders from the export market and 60% of orders were from the domestic market. On a first half basis, out of 1,085 crores of orders, 34% of orders from the export market and balance 66% from the domestic market. On the revenue side, out of 700 crores of orders revenue in quarter 2, 31% was from the export segment and 69% from the domestic market. Similarly, on H1 revenue of 490 crores, 32% revenue came from the export market and 68% revenue from the domestic market. The breakup of the backlog in hand of approximately 3,450 crores is also given on the page. 62% of this backlog is from the private customers, 20% of the backlog from state utilities, and the balance 18% from the central utilities and PSUs. So with that, we'll now open up for the questions. Thank you.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question at this time may press star and then 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to please use handsets while asking a question. We will wait for a moment while the question queue assembles. Our first question is from the line of Parikshit Kandpal from HDFC Securities. Please go ahead.
Hi, congratulations team for holding a tight rope on profitability. So my first question is the increase in debt. So you mentioned that working capital.
I'm sorry to interrupt. Parikshit, if you're on a speakerphone, please switch to your handset while you're asking your question.
Okay.
Thank you.
So my first question was on the debt level, so which has gone up. So our scale of operations has come down, even the order intake has been lower in the first half and even the revenues. So any particular reason, are we seeing any elongation in the working capital cycle? So can you please elaborate on this increase in the working capital debt?
Yeah, the changes in the working capital are given in the cash flow statement. So we had about 250 odd crore increase in the working capital. Most of it is in the inventory side because we have prepared inventory for the orders or in the manufacturing process for the orders which are in execution for quarter 2, second half of the year. And then rest of the increase is in the trade payable cycle and provisions and liabilities. As I said in the beginning of the call, that we are making continuous effort to increase the cash collection cycle to improve it and reduce the working capital and reduce the debt. We expect that from now till the end of the year, there will be an improvement from the current level of working capital, and we should be able to improve. So it's mainly the inventory and payment of trade payables which has led to the increase in the first half of this year.
Okay. So my second question is on the overall market size. I think we have been telling historically that the entire market size for us is about, India piece is about close to about 18 to 20,000 crores. So for this year, how do we see this given the backdrop of weaker inflows which has accrued in the first half? So how big is the total market size for us?
So Parikshit, Sandeep, we are still anticipating it to remain like about 18,000 crores, primarily because the markets have not, I would say, they have got deferred and not moved out. Like for example, I was just saying that the Rajasthan TBCB packages, Khavda TBCB packages, all those packages have got deferred. So one primarily due to GIB issues, one due to other clearance of survey issues, etc. But there the generation projects have already started coming up, and the tendering for generation projects have happened. So eventually the transmission schemes are going to come. So it's delayed, but it is not like the market has not vanished.
Okay. So the question is on the products. To address this market, so are there any product gaps? And after the GE Vernova thing which has happened, so do you think we can introduce more products on the HVDC side, the transmission side? So can the addressable market for us can go beyond 18,000 by introduction of new products? If you can touch upon that, any new products are being planned to be introduced in India?
So I think one thing is there that, for example, whatever HVDC projects are now coming. So we have already executed a similar project in India for the Chamta Kurukshetra. So the upcoming project is exactly similar, like it's a 800 kV plus minus 6,000 megawatt, which we have already executed. So on the HVDC front, we are not lacking anything on the technology side. In fact, the transformers, etc., were all manufactured in India only. And we were the first manufacturer in India to have supplied a 800 kV DC transformer. That is one thing. Second thing, on Vernova side, it is basically a restructuring which is happening at the global level. Not exactly a restructuring, but a split between the companies. But our product portfolio in that case is not getting impacted in any way. Only thing is what's happening is that the global team and the Indian team keeps on working depending upon the need. That if any new products can be introduced or if there is a requirement of new products which are there. So we constantly keep on monitoring, and the products which are required for the market, then they are brought in and launched.
Okay. And so just the last question on the current levels of capacity utilization, if you can talk about it, and the export opportunity. Can we reach out to more countries? So any plans over there to increase distribution in the exports market beyond Bhutan or some other countries?
So it's not that we are only exporting to, like, for example, Bhutan and all. There is a huge amount of exports which is happening to Southeast Asia, to Africa, to Latin America, even to few countries in Europe as well. So it is not that, for example, when Maria was talking about, he was mostly talking about from the project perspective, which we were doing in Bhutan. But the product-wise, if you look at our circuit breakers, our GIS, our automation, in fact, our transformers also, so we are exporting it to many continents which are there. And there is a constant endeavor also to add more countries. That is one thing. And second, also to improve the market share in the existing countries or to generate more volume from the existing countries wherever we are supplying to them.
So capacity utilization, the last thing.
Capacity is actually quite a flexible thing, Parikshit, because, we have, like, for example, when we talk about the transformer factory, so probably in 400 kV if you talk, then you will be manufacturing less number of units. In 220 kV, the number of units will become more. So it's kind of a flexible, I would say. But I would still put it as that we still have in one or two product lines, we still have sufficient capacity to take about 20-25% more orders as well.
So let's look at this in another term. In 2019, 2018, those years, we had a revenue of about 4,200 to 4,300 crores.
Yeah.
So it means that the organization has capacity to execute that kind of revenue and go beyond also. Obviously, it will require addition of new research on. But obviously, given the COVID challenge that we faced in the last couple of years and the issues on margin and customer liquidity in the past, we were selective for the last couple of years. And as the market picks up, we will try to improve our order execution, and we should be able to increase revenue if the order opportunities are at the right price. So we have capacity to go beyond depending on market situation.
Okay. Thank you, sir. Thank you.
Thank you very much. Ladies and gentlemen, before we take the next question, we'd like to remind participants you may enter *1 to ask a question. The next question is from the line of Ashwini Sharma from ICICI Securities. Please go ahead.
Yeah, thanks for the opportunity. Couple of questions from my side. First is, sir, the order inflow that you said that has been deferred. Is it possible to quantify these orders which got deferred for the quarter?
So it's close to about 500 crores, which is a combination of something coming from export market and also from industry. So we'll not be able to give the further details in terms of customers, etc., but that's the relevant position that we are having.
So 500 crore which got deferred. That's what you're saying.
Yeah.
Okay. And small clarification on the previous participant's questions on 18,000 crore, this addressable opportunity. This is purely for domestic market, right?
Yes.
Okay. So my second question is on the margins. If you look at Q2 margins, it's, we have barely reached at break-even at EBITDA level. So where do you see margin, given the fact that now the commodity prices have also kind of softening? How do you see this, FY23, ending in terms of margins are concerned?
So, Ashwini, thanks for the question. But as for the past practice, will not be giving the year-end guidance for any particular number. However, maybe a few clarification on the existing margin level. During the quarter, we generated a gross margin of 25.2%. This is lower. And there is one specific element which I want to highlight. We booked a charge of about 12 crore in this number related to foreign currency variation. However, there is a corresponding offset, a significant offset sitting in the other income. That is the reason we are calling other income as an operational item, because as per the accounting guidance, one leg sits in the gross profit and the other is sitting in the other income. If we eliminate that item, or true up for the gross margin level, for the quarter we will generate, you can count the gross profit as 27%. This is lower end of the range of 27 to 30% that we have, or 27 to 29% that we have communicated in the past. Whereas on an H1 basis, the actual gross profit number is 29.5%, but eliminating this 12 crore forex adjustment, the H1 gross profit is 30.5%, which is the higher end of the range we have been communicating. So I think this is within the range that we have communicated in the past, 30% of gross margin in the H1. As we also mentioned in the past, the order booking margin is generally 27 to 29 or 30% in that range. And during execution, we try to improve by another 2-3 percentage points to generate better profit. Last 1 year or 18 months, this was difficult or not feasible because of significant variation in the commodity prices and few other operational items as we communicated in the past. But our endeavor going forward is that we try to improve on this margin by various initiatives.
Okay, thanks for the explanation. And so lastly, on the if you can update on the Leh-Ladakh project, sir, what is the status?
So Leh-Ladakh project is going to take time because the power grid is going for some studies because of environmental issues and other things. So after the studies are completed, then the specifications will be drawn and probably. So it's bit slightly longer. I don't expect that it's going to take minimum more than a year to materialize.
Can we expect some positive news in the second half of the next year?
We are expecting at least one HVDC to get finalized next year.
Okay. All right, sir. Thank you.
Thank you.
Thank you. Ladies and gentlemen, you may enter *1 to ask a question at this time. Participants who would like to ask a question may please enter *1 now. Our next question is from the line of Charanjit Singh from DSP Mutual Fund. Please go ahead.
Hello, sir. Thanks for the opportunity. Sir, if I look at the current order backlog, also there's a 60% contribution from the private sector. And if you can touch upon, going forward, how is the outlook for the private sector and these, projects, the execution of the current order backlog, what's the kind of, time frame which we are looking at?
So the time frame that we're looking is, ideally I would put it as about 18 months time frame. And, why the private sector contribution is more and more increasing? Because the investment is happening on the generation side. If you look at wind, solar, these things, that's happening in the private sector, and in fact in the transmission sector also, if you see, there are a number of private transmission players who are now winning the bids for the TBCB project. So that's why the share of private sector is now increasing. Earlier, before the TBCB regime, it used to be dominated by the government sector.
Okay. So, but from the industry's perspective, are you seeing any kind of attraction there, from the maybe cement, steel plant? Is there any kind of a demand coming from the core industries for the power transmission equipment?
Yeah, so we are seeing a big uptick in this demand. So of course, cement and all, it is mostly the lower voltages requirement which is there. So cement plant expansions are typically more investment on 33 kV and below. But if you really look at the steel plants and also we are seeing at other metal sectors also. So we expect in time to come from aluminum as well. Some demand we are seeing coming from copper and also steel, but is one of the primary investments what we are seeing. So expansion of capacities which is there.
Okay. And sir, in the initial remarks, we also talked about automation in terms of the orders picking up. So if you can give more color, what is the kind of quantum of these automation orders and how does the competition stack up, or maybe from our market share perspective, how it has been, and can it expand from the existing market share, mainly on the automation side, sir?
So on the automation side, I would say that the digitalization of the grid is definitely helping a lot. That is one aspect of it. And we are continuously even talking to various asset owners as well for even the digitalization of the maintenance part of it. So because that's going to help them and us both in terms of providing the latest global technologies and also then it will give them a better predictability. And also these analytics will help them in reducing the downtime for those industries. That is the first thing. Second thing, on the competition side, of course, we are, I would say, equally on an equal footing as compared to our competitors. I'll not be able to comment much on the market share part of it, but I can only say that, now the projects which are coming, whether it is industry or whether it is, for example, the TBCB as a transmission side, the weightage of automation is slightly increasing. There are a few tenders which have come out with on the substation side on the pure digital technology. So that's why the share of automation in that project is slightly better, and we are totally geared up to deliver that kind of solution from the country.
Okay, sir. And sir, just lastly from my side, there's also talks about more capex picking up on the distribution side in terms of metering and distribution capex picking up. Any thoughts there, in terms of whether GE T&D can participate in that opportunity, or we are, developing the products which can cater to that market?
So we are not into metering side, but definitely, there is a scheme of RDSS which is coming. And GE is one of the leading players when we talk about DMS, the distribution management system. So I think once the RDSS packages which are going to come in, we would be very strongly positioned to grow in that area. So we have a quite advanced solution in terms of providing the distribution platforms in terms of the management system. And if you really look at, we have worked very closely with, for example, Tatas and all, and wherever their distribution systems are there, our platforms are already implemented and is working very fine.
Okay. So would this also require, we setting up any new capacities, and from the core business current, capacities perspective, what is the kind of utilization level, and how do we see the, capex for us shaping up going forward?
So these projects which we are talking about on the distribution side, of course, we are there mostly on the software side. So it's going to require more resources in terms of manpower, etc., integration, testing, all these things. But it is not going to require any additional manufacturing capacity and all.
So I will say additional thing that as far as the manufacturing capacity is concerned, whether it is GIS, AIS, control and relay panel, transformers, we have enough manufacturing capacity available in our 4 large factories in India actually.
Got it, sir. So that's all from my side. Thanks for taking my questions.
Thank you very much. Ladies and gentlemen, to ask a question, please enter *1 now. Our next question is from the line of Parikshit Kandpal from HDFC Securities. Please go ahead.
Thanks for the follow-up. Just one question. On the exports market, if you can quantify like how big is the opportunity for us, the bid opportunity there. So if you can quantify that.
So, export market, when we are talking about, it is mostly, today we are concentrating mostly on product export. So it's difficult to quantify because it also depends upon the transmission plans of those individual countries and the realization. But at a consistent level, we have been doing close to about 30% to 35% of our order intake is coming from the export market.
Okay. But that is on a lower base. If the ordering improves, the domestic becomes larger part of that, but the proportion will come down, right? Because I think we have done 370 crores of exports inflows.
Okay. The only thing is that I think going forward, because more and more we are seeing that the renewable capacity globally is getting added. So, the renewable is actually driving the transmission market today, because you have a generation capacity which might be the conventional part, and then on top of that, when you are adding the renewable capacity, so the demand and the drive is there. Of course, we are looking at Europe and all, Europe, US, etc. Of course, the demand has been, the demand which is now coming from Europe and US has been phenomenal for the transmission piece. Only thing is that we are expecting now that similar thing to get replicated into other geographies as well, like what we are seeing today. Today we have a kind of a 400 gigawatt of installed capacity, and it's supposed that, not supposed, but in 2030 it will be 500 gigawatt of renewable capacity. In next 8 years, we have to add practically an identical generation capacity to what is existing. So that's going to drive the demand in a big fashion. This same thing is going to get replicated into many geographies, and I think that's going to drive up the demand in export market as well. Only thing is that some geographies have slightly delayed plans of renewable. Some geographies have a very advanced, I think, plans of renewable. So that's how the shift is going to happen between the demand of export market.
Okay. Basically, you're saying is the renewable infrastructure on the transmission side picks up. So we see a very big pipeline building up over the next few years as the renewable energy picks up, right?
Definitely, it's going to happen. There's no doubt on that. I think maybe in next 10 years is going to be next 10 to 15 years is going to be a big time for the renewable generation companies, and it's going to positively impact the transmission companies as well.
Okay. And so within the domestic market, how are our relationships with the players who are basically on the EPC side, and they sometimes take support bid from us while bidding for some of these packages on the EPC side, the tower packages, and then they give an entire complete solution, including transformers and the transmission entire ecosystem. So how is the business development activities there? How is the relationships there, likes of Kalpataru or KEC? So if you can also highlight that.
So I would say that we have a good relationship with all the EPC companies which are there. If in fact in the presentation, if you would see, there are a number of orders which are there from Kalpataru, KEC as well, which have been listed in the order pipeline, or not pipeline, but orders what they have acquired in the last quarter. Of course, we are one of the leading OEMs, and we have like decades of relationship with all the EPC companies which are there.
Okay. And just last thing for this L1 order of 500, so is it like typically you carry these kind of L1, or is it like every quarter, or is like one-off, like a big L1 there, or there are a lot of orders there?
No, so we don't carry this volume of something we would always be carrying, but not of this volume.
Okay. Is it a government order or again a private order? I mean, is it like
combination of both? It's a combination of both.
Okay. Sure, sir. Thank you, Anand.
Thank you. Thank you, Parikshit.
Thank you. Ladies and gentlemen, to ask a question, please enter *1 now. Our next question is from the line of Aniket Mittal from SBI Mutual Fund. Please go ahead.
Yes, a few questions from my side. Firstly, if you could just talk about the competition intensity right now that is there in the market. And the reason I ask this is because when I look at some of the competitors, the order inflow for them has been healthy, while we've not been able to grab that amount of order inflow. So just wanted to understand the reason for this, and how do you look at the competition right now in the market?
So Aniket, two things here. Yes, I know, but first is that yes, we have been selected in terms of our bidding strategy, definitely in the market. So we look forward for the surety of payment, the price levels, and everything. And for example, this quarter, that's what I was saying, that some of the orders which were expected where we were L1 has got shifted to the next quarter, which is Q3. So I think it's a combination of both things, our selectivity and also the shift in the orders. But I would only say that as the quarters are progressing, the competitive intensity is, I will not say to a great extent, but slightly coming down. That is one thing, and we are seeing an uptick in the price also, which is happening.
Okay. Yes. The second question was just to understand a bit on the order book. So in this current order book, are there any projects that are slow moving because of, let's say, certain contracts that we would have won in Rajasthan, which are now getting related to GIB issue? We just wanted to understand any slow moving orders here.
So presently we don't have any contracts which have got stuck up with for GIB issues. In fact, there are projects which are stuck up for GIB issues, but there we are a product supplier, so the EPCs or the end clients are accepting our product. So we don't have a challenge on our factory because of any GIB issue.
Because in one of your remarks, you mentioned that a few 500 crores of orders have gotten deferred. So which, where do these orders fall in place?
No, so basically, sometimes what happens is that, so we have emerged L1, and then the decision-making the process in the customer, like the approval of board, management, everything, takes a bit longer time, and that's how the order will not come by end of September, but might come in October or something like that. So that's how it got deferred. But it has nothing to do, these orders which are there with 500 crores have been returned, has nothing of a GIB or any of the environmental issues associated with that.
Okay. The next question was on the working capital front. I think you mentioned that there's been a 250 crore drag and we plan to improve this going forward. If you could just highlight what sort of working capital days are you currently at, and where do you think you'll end for FY23 and going forward?
So, talking about the increasing working capital for about 250 odd crore, one major increase, as I mentioned, was inventories, and these inventories are created for the revenues of H2. At the same time, we have an outflow in the supplier payment due to reduction in the volume. But the corresponding offset is not there is smaller offset in the receivables. There were a few payments end of September which were operationally stuck for a limited period, and we hope to realize that in H2 as well. So the endeavor is always to recover a large chunk of this 250 crore outflow, which was because of timing of the requirement of the projects under execution, to recover that, most of it in the H2. In terms of number of days of working capital, let me just check if I have that data readily available. Just maybe give me a few minutes, and maybe we'll answer that in few minutes.
Okay. Just maybe one last question. This was on the gross margin front. So like mentioned, if you adjust for the foreign currency variation, you still have that 27% mark. How would you look at the gross margins going forward based on the current order book that you have? Would we remain in that 27 to 29% mark?
Yeah. So we have a long cycle project business, and many a time the projects which are under execution, specific projects, change the margin level of the quarter significantly. So in our business, we have been continuously communicating that let's look at the gross margin for a longer period. For the quarter, eliminating the forex impact, it is 27%. However, if you take H1, eliminating the forex impact, the gross margin is 30.5%, which is at the higher end of the range of 27 to 30, which we have talked about. Endeavor is to first at least maintain this and try to improve further in execution. However, that is dependent on many factors, including the commodity price variation as well. Your earlier question on the working capital, at present we have the working capital at around 80 days of revenue.
Okay, and what is it that you're looking to bring this down for? Because you mentioned in your comments that by the next 6 months this will likely come down.
We'll try to recover at least half of this. Okay. In various sectors, including receivables, reduction of inventory, at least half year planning to recover in next year of this financial year. Half of the outflow, I mean 250 crore outflow, minimum 140 crore of recovery, we are targeting internally.
Wonderful. Thank you. Those were my questions.
Thank you very much. Ladies and gentlemen, participants who wish to ask a question may enter *1 at this time. Anyone who wishes to ask a question may enter star one now. We have questions from the line of Amit Anwani from Prabhudas Lilladher. Please go ahead.
Hi, sir. My question is with respect to the 18,000 crore prospect which you have mentioned. If you could just throw some color, which kind of product 400 kV HVDC, any breakup you have factored in. Also with respect to central, state, or anything, any more color on this 18,000 prospect here.
So it's basically combination of project and products which is there. So normally this could be comprising of power grid projects, this will be comprising of TBCB projects, this will be comprising of state utility projects, this will be part of industry, and in the street also there are a lot of opportunities for direct products as well, like for example transformers and control relay panels, breakers and other items as well. So this is primarily consisting of this whole thing. If I would try to put it as about the split between 400, 765, 220 and 132, that I really don't have it available with me, but I think close to about 50% will be coming from 400 kV and balance other voltages will be contributing the balance 50% of the overall volume. This year, out of this, about close to about 2,000 crores will be getting contributed from HVDC. But next year, this we expect it to be a higher volume for HVDC next year.
Okay. The next question is on the top line. So you mentioned about the prospect because of the 500 gigawatt opportunity which is there till 2030, and you mentioned about some report mentioning some great opportunity for the sector in coming 5-7 years. How we can position GE T&D with respect to growth prospect in the next, let's say, 3 to 5 years in this? Any assessment you have done?
So already, for example, all our factories which are there are delivering the latest technology which is there. For example, we are one of the 2 players in GIS who has a complete product portfolio from 765 kV till 66 kV GIS offering. And if I look at whether it is automation, whether it is circuit breakers, instrument transformers, we have a presence and I would say a complete portfolio which is available. Also on the digital side or on the high capacity side when I see, so we have the portfolio of HVDC, SATs, STATCOM, so all such technologies are available. And I think we are just, but on the other side also I would like to point out very clearly that we would be selective in the market in terms of picking the order, looking at 2 aspects. One is the payment capacity of the customers. That is one thing. So the payment security is must. And second also, it needs to be a profitable growth rather than just a blind growth with no profitability coming.
Okay, but so can we expect some growth in 3 to 5 years in the top line? Some growth there?
Yes. I would not like to put a number to it, but yes, we expect a growth from the present volume.
Thank you, sir.
Thank you. Ladies and gentlemen, you may enter star one to ask a question. Our next question is from the line of Bhavin Vithlani from SBI Mutual Fund. Please go ahead.
Good evening, gentlemen, and pardon me if this question is repeated. I joined a little late. So this question is on the competitive landscape and market share. If I look at the results which have been announced, so where Hitachi has shown a 32% growth in the new orders, CG Power has shown a 58% growth in the orders for the power T&D division. Whereas when I look at GE T&D, there is a drop of greater than 20%. So as an outsider, it seems like there is a significant loss in the market share. And Hitachi also, we understand there was an HVDC, but that was in first quarter. So if you could just help us understand about the market share, and is this, if you can help us understand, read it, that would be very useful.
So, hi, Bhavan, Sandeep here. So basically, one of the things what happened was that there were few orders which were, I would say, negotiated or we were L1, but close to about 500 crores. The final ordering has got shifted to this quarter. So that was one of the major impacts, because of which you see a drop in the numbers.
Okay, sure. So one has to add 500 crores to the current 500 crores of orders that we have booked. So it will be more or less like 1,000 crore kind of a number.
Not exactly, because we always carry. So every quarter we would be having this phenomena where we carry certain amount which we are L1, but it doesn't get divided into that. But it's not to the tune of 500 crore. So there is always this phenomena, but not to this extent.
Understand. So what would be that normalized that L1 that you would be seeing every quarter, just to understand and do a more like-for-like comparison?
So normally somewhere between 150 to 200 crore is what we kind of, it also depends upon quarter to quarter, but there are times when we carry somewhere between 150 to 200 crore to the next quarter. But this time, because of slight delay in customer processes, the value became close to 500 crores.
I understand. Second question, again, a slightly related question. Power Grid, in its analyst meet, mentioned about 24,000 crores of project held up due to the Great Indian Western, which can be cleared only once the verdict comes in. If you could give some color on what's the kind of projects which have been held up. Alongside, if you can also help us understand about the competitive landscape, because some of your peers have started announcing capacity expansion. So what's the kind of capacity utilization that we have? So there are a few questions in this.
So Bhavan, for GIB issue, I think there are two types of projects which are there. So one which is already awarded and which are stuck up. So I just explained, I think, prior to your joining, that in that we had few orders, but for us, those products have not got stuck up because the customers are accepting those products and they will be storing somewhere and will be using that. So that is one aspect of it. Second, yes, I agree that because of the GIB issues, the upcoming pipeline of Rajasthan has got stuck up totally, because in the last quarter itself, we were expecting that the decision should come and the whole pipeline should move, but it is still stuck up, and now it is still not moved. But we expect that in the next 2 to 3 months, that whole pipeline is about close to about 5,000 to 7,000 crores should move for the GIB issue which is stuck up. And it is not only the transmission projects which is stuck up, it is also the generation projects which is stuck up, where also we have a lot of product opportunities, whether it will be circuit breakers or automation or transformers, etc. So that is another aspect of it. Regarding the, for example, the capacities which are there, I think today we have sufficient capacity, I would say, in the factories, and only thing is probably if, for example, we require some few resources and etc. to be added, but that can be added at any point of time depending upon the situation or depending upon the uptick in the market which is there. What I mean saying is that, for example, this a host of pipeline of projects have been available with us for last about since 2020, but there has been constant shift which is happening. So whatever projects got announced in 20 got shifted to 21, from 21 and 22 it is now getting shifted to 22, 23. And we are also seeing now a few projects of Khavda and Rajasthan again shifting, but there are new projects for next year. For example, If you know, there is a host of about 30,000 crore project. 30,000 crore not for us, but for the complete transmission space, which includes lines, etc. Everything has now recently been announced by the government in the new transmission committee. So that, the visibility of pipeline is there, but there is a constant shift of pipeline which is constantly happening. So that is something, which is making it the unpredictability part a bit higher.
I understand, right? Alongside, an extension of this, historically we've been talking about states differing on the ordering. Are you seeing any reversal in the deferral, and are we seeing any states, and if you could name some of these states where we are seeing a positive traction?
So there is not much of a traction in states. There are few opportunities which have come up, but that again got deferred because of budget issues, etc. So one was, for example, DTL. We are seeing some opportunities in Odisha, something coming up in Gujarat. But I would say it is still not something. So earlier we used to see that states used to contribute close to about 40% of the minimum market of transmission. But today we don't see anything of that value coming from any of those states.
Sure. Yeah. These are my questions. Thank you so much for taking my questions.
Thank you, Bhavan.
From our side.
Thank you very much. Ladies and gentlemen, that was the last question. I now hand the conference over to Mr. Sunil Mishra for closing comments. Please go ahead, sir.
Yeah, thank you, Rochelle. And thank you everyone for your participation. With this, we conclude today's conference call. In case you have any other question, then please feel free to contact me or Mr. Anshul Matan. Thank you again.
Thank you, everyone. Thanks.
Thank you very much, members of the management team. Ladies and gentlemen, on behalf of GET&D India Limited, that concludes this conference call. Thank you for joining us. You may now disconnect your lines.